Hi everyone, Nathan Myers here, founder at Raises.com, and in this video I'm going to tell you how to take advantage of the interest rates if you're looking to buy commercial real estate. Because what we found is the interest rates are going down in North America, 50 basis point drop, and in Canada we had a drop recently as well. So what does this mean, and how can you use this to either raise money or save money when you're looking at acquiring more real estate? The first way is we have to really be careful, and we have to look at the prices and the demand. So when interest rates go down, the demand for real estate always goes up. When I say always, 99% of the time, if you look at historical records, the price and the demand of real estate changes. So when there's a downward trend, we see the lower interest rates mean that there will be a higher demand for real estate. And so this means that the price of real estate will usually go up. And when the price of real estate goes up, then you're going to benefit if you're somebody who owns a lot of real estate. The reason why the demand goes up is because more people are able to acquire real estate with less money. So if somebody has to get a loan to buy real estate, which is most people, no matter whether it's commercial or residential, people are going to have to get a loan to acquire the real estate unless they have the money. And very few people have the money and millions of dollars in their back pocket to be able to acquire real estate. So what people do instead is they get loans. So these loans are just mortgages, and people use all this fancy terminology to scare people away, as we know. And the fact that people get loans to get mortgages, and it'll be easier to get loans to get houses or get mortgages to get houses, the fact that it's easier because the interest rates are lower means that the barrier to entry will go down for people to become a buyer and for people to enter the buyer's market. And when the demand goes down, or not the demand, when the difficulty goes down to become a buyer, you'll have more buyers. And we have the same amount of sellers on the market. So when you have a lot of buyers and you have the buyer pool increase, you have the same amount of sellers, then you're going to have higher demand for the real estate. When there's higher demand, the sellers are going to be able to bid and choose the buyer that they want to go with, making the prices go up. The second thing you want to be careful of is when you're buying real estate in a lower interest environment, you want to look at the profit that you'll make. So more people have the opportunity to make more profit off of worse business models. So the worse you are at business, the better and easier, I guess the easier it is to make money when there are low interest rates, because you don't have to rely on, having a really sharp, like as sharp of a business plan. One always needs a sharp business plan, but the business plan can survive a bit more sloppiness when the interest rates are really low, because the whole point is to buy assets, rent them out, and get the profit. The profit, in a nutshell, is the rental income minus expenses. One of the biggest expenses is the interest rate. So if that interest rate goes down, you'll have more wiggle room to make more profit, despite a lack of business acumen. So, that's another reason why more buyers can enter the market, right? And especially with commercial, what you're going to find is it's less about renters and it's going to be more about, people leasing property. So in other words, renting property. So it's really the same thing. And these lease terms are really long. So if people lock in like a 30-year lease, very long-term leases, everything becomes a bit more intense and a bit more important for you to buy real estate when interest rates are really going down and really low. And if you're at a point where you think that the interest rates will continue to go down, there isn't a huge rush. But when you're at a point where you think the interest rates will go up, then there's a huge rush and there'll be a huge urgency to do this. Usually when interest rates go up, the thing that influences interest rates going up is when there's high inflation. So high inflation is a leading indicator of the interest rates going up. But a higher, I guess, when the inflation rate goes down, like right now, the inflation rate, I believe, hit 2 or 3%, and it's going down, depending on where you're hearing this, then that's a leading indicator for the interest rates going down. And so when inflation rates go down, it signals the government to decrease the interest rates. And then when the interest rates go down, that's a signal to decrease that's something that will make it easier to buy real estate. When there are more buyers, then we have the prices going up because there's higher demand. And when the supply stays the same, then the prices will definitely go up. So just expect the prices to go up as a balance. And then how can you use all this information to make money? If you're looking to get into commercial real estate and raise money to do so. Just remember that if you're somebody who's new to doing this, now's probably the easiest time to do it when interest rates go down, because people who are more new to this type of work, are able to be empowered to get into this type of business, number one. Second thing is, you have to be careful in not being too confident or overconfident or cocky, because if you're too cocky and you have a sloppy business model, when interest rates go back up, and you're on something that is variable, or you refinance at a higher interest rate, then your business plan can't survive if it's too weak. Because just depending on a low interest rate and having a sloppy business model may work, for the next few years, but if you get to the point where the interest rates go up and then you need to refinance before the interest rates go up, or you're on a variable, then the issue is you'll be stuck in a situation where you have very little wiggle room to make profit. And the third thing is, you're going to see a lot of gurus and people that, time the market, come up and have really good deals. And it has less to do with their skills many times. It has more to do with the timing of the market and what the market does. Because one of the greatest influencers of the market is supply and demand. It's less so about what somebody does in their situation. It's more about timing and being in the right place at the right time. So with this, if you want to raise capital, you want to see how the process works, just book a consultation at raises.com to see if it makes sense for your situation. And if you want to support the information, this free information going around and empowering people to buy more real estate and businesses, just share and like this video and subscribe so that, we can actually send more of these free videos and information, right to your feed. And so with this, we look forward to seeing you in the next one.